Hey everyone, it's Mike from Orderflows and welcome back to my channel. I'm glad you could join me for today's video where I'll be talking about tools that you could use along with Orderflow. But before we jump in, if you've been learning from these videos, don't forget to subscribe to the channel and be sure to click the notification bell so you don't miss a new upload. And honestly, if you find today's video helpful, hit the like button and leave me a comment sharing your biggest takeaway and what you'd like to see potentially in an upcoming video. I love hearing your feedback, so your support really goes a long way in helping me create more content just like this. So again, if you're getting value from my channel and want to see more, be sure to subscribe, and we'll go through your trading journey together, so to speak. So let's go ahead and get started with today's topic. All right, so let's jump into it. So this the whole purpose of today's video is based off of a comment from one of my earlier videos by Yashawan Kumar. I'll just call you Kumar for short, on basically suggesting what should be used along with the order flow. He says, do you suggest using moving average, VWAP, or an alligator tool along with order flow? Well, it's a good question because, I've always been a big advocate of, traders have their own way of trading to begin with, whether it's something like VWAP or alligator tool, even a moving average, right? I mean, support and resistance is something that a lot of traders understand and use. They have their own way of calculating support and resistance. And, I'll talk about VWAP because that's something, a lot of traders talk about. So this is crude oil, okay? This is a VWAP. This is the basic Ninja Trader out of the box VWAP tool, okay? And you can see it's green if we're trading above this line in the middle here. It's green if we're trading above VWAP, red if we're trading below VWAP. And you can see there's areas in here where we're trading back and forth around VWAP, back and forth around VWAP. And this is where a lot of traders sort of get stuck, right? Because they think that, oh, this is it, we're breaking above VWAP, they're getting long, and then it sort of comes down in here. And maybe they get stopped out, then they're back up again. Oh, we're breaking out of VWAP. We're going to hit the first standard deviation. It comes back down, and they get stopped out again. So, there's a lot of different ways that people use VWAP for trading. Unfortunately, in my opinion, a lot of traders have sort of bastardized VWAP and made it into a form of a moving average, unfortunately. Now, there's great ways to trade VWAP, right? Anchored VWAP is a great way. I've made videos on that in the past. Basically, what you're looking for, again, whether you're using VWAP or a moving average or calculating your own supply or support and resistance areas, using pivot points, you want to watch how the market is reacting when you're around VWAP, okay, or deviations, right? Because again, a lot of traders, right, market hits the standard deviation, they're looking for a big bounce back towards VWAP, right? But what they don't realize is deviation is also moving down as well, right? The second and third standard deviation, and if price is trending down, we could easily hit the second deviation, don't quite get down to the third. But I mean, did price move back up to VWAP? Yeah, it did from the time it hit the first deviation here at 76. But are you going to take heat all the way down to 40, right, before it comes back up to 01, right? And it's not like if you're buying in here at in the 90s, right, because we just hit our second standard deviation, it's going back up here. VWAP was at 20, 24, it's coming down. So, if you're long from, 95 and it only trades back up to, what is that, 11, does get back up to 22 before it comes back down, it makes new lows. So what you want to do, right, is you want to watch the order flow and sort of understand, what's the potential for a move up or a move down? Is it going to keep going down, right? I know a lot of people, this is like their bread and butter. It hits first standard deviation and rallies back up to VWAP, okay? So let's just take a look at the order flow, okay? So again, this is my footprint chart for crude. Let's add the VWAP on here. Again, this is just a simple Ninja Trader VWAP. But again, it doesn't matter what you're using. It could be VWAP, you could be using your own support and resistance areas, lines that you're drawing, fib numbers, etc. I'll just make this 3 so it's a little easier to see. Okay, so let's just go back. Let's go back here to this 8 o'clock. So yeah, 8 o'clock, we're trading above VWAP, start trading below. We hit the first standard deviation, market rallied from the first standard deviation back up to VWAP. What happened when you hit that first standard deviation? You had a nice bullish order flow. You got a bullish EVA, you got a single print in this bar, you got two buying imbalances. That's a good trade to take, and we rallied about 20 points. Okay, and then we're just rotating around VWAP, right? And what people don't realize is like, oh, I'm just looking for a reason to get short or long off VWAP. No, you don't want to do that. That's basically where you're trading in the middle of a, I don't want to say sideways activity, but when you're trading at VWAP, that's where price is supposed to be. You want to be away from VWAP to trade back towards it. Okay, that's your your control price, so to speak. Okay, so then we start coming off. We come down to our first standard deviation, and not only did we come down to it, we just blew right through it. We got 1, 2, 3, 4, 5, 6 selling imbalances. We've got 2 zero prints in the bar. Okay, am I going to be looking for this market to bounce back up to VWAP? Well, it could. I'm not going to throw that out the window, but I don't really see anything bullish coming in here yet. Right? If anything, I see more bearish information. I see the bearish prominent point of control, 1, 2 here. This is a bearish EVA as well, and bearish EVA. So if anything, I'm not looking to just, we're trading below the first standard deviation. I'm looking for it to rally back up to VWAP. No, if anything, I'm looking for this to happen where we come down here and hit our second standard deviation. Okay, we hit that, then we start rallying back up. Okay, we get back up past the first standard deviation, but we don't quite hit VWAP up here at 24, right? It's right up here. We only get up to 11. Then we start coming back down, right? And as we start coming back down, what do I see? I see an exhaustion print 6. I see a bearish prominent point of control right here. See imbalance reversal, this 9 against 63 coming in here. Bearish information. So now I'm looking, okay, we haven't rallied back up to our prominent point of control. Now I got bearish, or sorry, rallied back up to our VWAP. I got bearish information coming in here. I should be looking for it to hit back down to our second deviation and probably potentially blow through that. And we do. We get down below the second standard deviation and keep going down. Okay, now we're seeing some bullish information coming in here. Bullish prominent point of control, bullish slingshot, stack buying imbalance coming in here as well. Right here you got a zero print. Maybe we could rally at least up to 90. This is from the 60 area, 70 area, so that would give it potentially a 20-point move. But it doesn't even get up there, right? If anything, I was looking for, this is an area I'd be looking to buy, honestly. I'm not going to say, well, with some reason that I didn't admit there. It just didn't get there, okay? And it starts coming back down, hits that deviation. That's why you got to have a stop in the market, okay? But as you notice, right, the deviations are moving down, moving lower, okay? And then it's just sort of going sideways in here. Yeah, you get some bullish information. You got your second deviation, bullish slingshot point of control, bullish EVA. Starts to go a little bit higher, but it's just going sideways in here. Okay, then you get this bar. You're still hugging your second deviation. Zero prints, 4 of them in there. Some buying imbalances. Okay, so again, if you're long from in here, you wouldn't have gotten stopped out yet, in my opinion, right? You'd be looking at the low as your stop. Potentially for a move back up to at least 80, the 83 area. And it's just, unfortunately, just going sideways. And again, part of trading is understanding the time element, right? If you're in a trade if you're trading a 1-minute chart and you're still in a trade and it's not really moving for 15 minutes, it's probably not a good sign that you still want to be in that trade. Okay, and what's that? It's just going sideways in here. All right, that's not a good sign. Hits the deviation again, but again, still hasn't necessarily stopped you out. Bullish, prominent point of control, another zero print, and again, it's just hanging in there. It's not necessarily going to be the greatest trade. Eventually, you do get up to that 78 area. This deviation had moved lower. But again, that's one where if you're in the trade for a long period of time and it's not moving on you, get out. Okay, but this is this VWAP. But again, it doesn't have to be VWAP, right? Maybe you're using. Let me just take off this VWAP. Maybe you're just using something simple like fibs. Okay, it doesn't matter what you're using, right? Let's shorten this. So let's add retracements, right? Go from the high to this low. As you can see, it came right back up here, 61.8, got within a tick. I think this high is what, 24, 61.8 is 81.24, so I think this high was 23. But anyway, it got within a tick there, right? Beautiful, right? The fib guys are, yeah, see, this is it. This is what you should be trading. But really what you want to be watching is how's the market reacting up here when it gets back up to your level, 61.8. If that's your trading strategy, I'm not saying that you can just go add 61.8 to every single chart, but let's do it. Okay, take off this VWAP. And we're going to add the fib on there. Let's take off that VWAP first. Okay, and then once this chart comes back, I'm going to add, well, let me make it shorter. So okay, because that's our high, right? That's our low. So we'll just add the fib. Right from here, right? Well, it's here showing as 25, but just draw that line out here, F6, extend it. Okay. So, okay, well, I mean, to me, the important ones are 50 and 61.8. Okay, so when it gets up to 50, so these are my two levels. Okay. It just blows right through it, right? Coming back up to 50, very strong buying, right? You see the exhaustion print, not exhaustion print down here is 4, but up here you got thin prints, you got a couple buying imbalances. You blow right through it, okay? I'm not looking for this market to sell off from here yet, but I know I get, at 25, I want to watch how the market comes back up there, right? And we get within a tick here, we get to 24, all right? And then what happens? Well, I see an exhaustion print here of 2. I see a 0, 0, that the thin print's in the bar. Okay, so it's starting to react off of this. All right, this is my level. All right, ideally, I'd love to see the exhaustion print right at the level, but you got to watch what's happening when you're trading around your level. Okay, and it starts coming back down. You got 2 imbalances coming in here. Obviously, the negative delta. 2 more imbalances in here, bearish point of control. Okay, so it's traded this, and this is coming in right below the 50% level. So this is my area here between 09 and 25, right, that I'm looking for potential signs of rejection, and I'm seeing it here, starting here in this bar. So I'm not looking for this market to keep going up. I got my go sign already, right, and then the market starts working its way back down, and it's just littered with bearish order flow. Just really quick, I did send out an email to my email list earlier about, this tool package from Ninja Caters. People are, why are you sending me this, Mike? But it's really, they have this pure pattern trader, right? And I sort of worked out a deal with the guys at Ninja Caters. There's 3 parts of it. There's Elliott Wave, harmonic pattern, and pure pattern trader. But pure pattern trader is the one that I want to focus on. Okay, and just really quick, what you could do, right? They got all these different patterns. Since we're sort of talking about, what can you use? You could use any form of technical analysis, whether it's moving average, whether it's VWAP, etc. And let me just shut down these other things because I just want to show you something really quick. Just, sort of to drive home the point of, you could use whatever form of analysis that you want. Just be consistent, okay? And watch how the order flow is reacting around those areas, okay? And, whoops. Oh my God, let's make this medium for swing strength. I'm still playing around with the swing strength from between medium and well, just give it a second here because it's going to take a second to come up. But, really the point is it doesn't really matter how you find your levels, as long as it's your way of finding your levels, as long as it's a way that you understand how those levels are formed, whether it's a technical pattern, whether it's a VWAP, whether it's an anchored V, whether it's volume profile, whether it's market profile, okay? And really what you want to be watching is what's happening in the order flow. So I have this set, okay? I have it just set to show double bottoms or double tops. And this S&Ps, right, we had this double bottom forming down here today. Here to here, right? It's a double bottom. Now the cool thing is you can sort of adjust it to sort of figure out the ratios. But look at this. On the first double bottom, right, you had the prominent point of control. But on the second double bottom, the second bottom of the double bottom, not second double bottom, you also had a bullish prominent point of control. Okay, so I'm forming a double bottom, and I got a lot of bullish order flow coming in. What do you think that is the sign of? Well, it's a sign we're probably going to go higher, right? And we did. We rallied off of this double bottom, right? Because there's times where you have double bottoms and the market keeps bottoming out, or you have a double top and the market is either going to sell off or it's going to rally against you, right? So if you have some sort of tool that you're looking at, or your own way of your own analysis, right? There's nothing against doing your own analysis, finding a head and shoulders pattern, wrap order flow around it. Okay, simple, right? Okay, I got a double bottom, and on this double bottom, I know that I had, bullish prominent point of controls literally on the bottom right here. All right, then I see as we're sort of breaking out past this line here, right? This is your validation line. What do you get? All right, you got buying imbalances. You got thin prints in the bar. And it's just off to the races. So, all right, everyone. Again, I hope you guys are getting some value out of these videos. I enjoyed making this video because this is a question I get asked actually quite a bit about what else can I use with order flow as opposed to just pure order flow. There's no law that says if you're an order flow trader you have to only use order flow. No, that's bullshit. You could use whatever you want with order flow, right? And that's where you're going to get the most value from order flow, is wrapping it around the way you're already trading, right? And it kills me because I do see some of the negative comments from people, and they say, oh, order flow is this or that, it's a new fad. It's not. Order flow has been around for over 100 years, right? Jesse Livermore, Reminiscence of a Stock Operator. If you ever read that book, he was a tape reader, right? Which is what? Order flow. And, or they'll say, no, you got to look at this way at the market. Okay, you could take your existing way, price action, but add order flow to it, right? For a lot of traders, it's really been sort of the key that's unlocked the difference in their trading from being, mediocre or, break even or a loser to being more successful trading. All right. So again, be sure to subscribe to this channel. Keep those comments coming. I'm really enjoying them. And I'll catch you guys on the next video. Bye-bye.